Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we're going to be talking about BBIG or Vinco Ventures, but before we get into that, I'm using a new mic setup. Well, it's the same mic that I normally use, but I'm using it with less gain and closer to my face so you guys can see it right here. It's a new setup. We'll see how it works. But my room just naturally has a ton of echo, so this should help with the echo and make the voice a bit clearer to listen to. And I hope it helps you guys and aids you guys in your viewing experience here on this channel, because the last thing I want to do is give you guys some bad audio. So anyways, we're going to be talking about BBIG, and BBIG has been going down since my last video on it, and I do believe that there might be a little bit more room for it to fall. My biggest criticism on my last video is I did not go over the fundamentals of BBIG. A lot of people believe that Lamotive, or the company that BBIG is acquiring, which is very similar to TikTok, is valued at about $5 billion. Now, that valuation was given by a third party, and it was not a verified valuation, so we don't know if it exactly is worth $5 billion. And the biggest valuation technique that people have been using is comparing the valuation of TikTok, which is at $450 billion on ByteDance's IPO, and then comparing the monthly active users of Lamotive, which is about 30 million users. You get a ratio, and then you multiply it times that $450 billion that TikTok is IPOing at. You also need to compare where exactly these users are in the world, because not every geographic region has the same value per active users. So an active user on social media in America is not equivalent to an active user in India. And my last criticism against the fundamental valuation of BBIG is the fact that their 40% stake in Lamotive technically should be $2 billion, which would raise the market cap of BBIG to $2 billion. Now, BBIG is currently at $540 million in market cap. And with all of the attention that BBIG is getting and its current volume, I don't think BBIG is slipping under the radar as being a value stock. Markets tend to be efficient enough to value these things appropriately, and if there is a deep value opportunity in a top 20 volume stock on the stock market, I guarantee you that Wall Street would be eating this thing up and they'd be squeezing out other hedgies on their own. So those are my thoughts on the fundamental analysis. Again, they're just my thoughts, they're just my opinions. I'm not here to cause a war between retail investors and try to drive this thing to the ground. I'm honestly rooting for absolutely everyone to make money. I've no incentive to get anyone to lose money here on this channel. I'm not long or short BBIG. So just take my thoughts and opinions with a grain of salt, and make sure you do your own due diligence before investing or selling any stock in your portfolio. Anyways, guys, that's enough with all that. If you guys would like to sign up for Public is an amazing stock brokerage. They're giving up to $70 in free stock as long as you deposit at least $1 on their platform. So it's basically free money. So check that out using the link below in the description or in the pinned comment section. And if you guys don't mind leaving that early like on the video, it would be highly appreciated, as that's the #1 thing you guys can do to help me out here on this channel. Anyways, guys, let's get right into the video. Alright, so here we have the chart of BBIG or Vinco Ventures, and as you guys can see, we have the hourly candlesticks. This thing has been trending downwards over the past week or two, and yeah, it's been having a few jumps. As you guys can see, there's a few big candles, but it's always been met by an equal or greater sell-off, which is something I've been warning of. Now, if it does end up breaking out of this resistance line, I do think there could be a dead cat bounce back up to that 200 SMA, so there's always a chance this thing could bounce up back up to $9 per share, so that could definitely be an opportunity if you guys wanted to catch that. But I do think that over the next few weeks this will slowly die off with the current volume. And if we go to the day chart, we can see that my analysis is playing out. We saw the MACD lines cross and it was pretty much all green, and now the red downtrend has been forming, and we have seen that slow but certain sell off. This is where I made my video last week. It was at around $8.20 per share, and now it's back down to $7.22 per share as of today. And we did see a few jumps at market open the past few days, but it's always been met with that equal or greater sell-off, which is what I've been warning you guys about. We'll just jump into the minute chart on today. You guys can see it's almost an easy pump at open, but then it sells off as soon as we get into the trading day. I mean, the same thing pretty much happened yesterday. There was a nice little pump up to $7.88, but then it sells back off to $7.23. So this is something I do see continuing to happen, as a bunch of retail does like this stock a lot. I mean, it's pretty obvious that people are bullish on this stock. We're going to take a look at the options flow later to really analyze the sentiment around this stock. But yeah, I mean, I don't want to do too much technical analysis. I like looking at the short interest data for this type of play, because short interest is essentially what is going to be driving a play like this, especially because personally I don't see the fundamentals. I do see this as a short interest, short squeeze play. So that is why I am giving it this type of analysis. However, you feel free to analyze it however you want. And if you got in at a much lower price, then definitely consider holding it for the long term. I just personally don't see the point of buying a stock that's up hundreds of percent in a few months based off of speculation alone to hold that for the long term, because there's just so much downside risk. So anyways, we have the short interest changes, and you guys can see right off the bat, you see the cost to borrow is down to 33%. So it's getting a lot cheaper for shorts to short, and the short interest is back to 27% with 19.74 million shares outstanding. Now, one thing to keep into consideration is that the borrowed shares is 3.37 million and the return shares is 74,000. And now we're going to look at this more in depth on a day-to-day basis, but that is just based off of today alone. So more people are borrowing shares to short than shorts are covering on this stock. And you can also see that the utilization is down to 92.67%, which is interesting. They're not fully utilizing the float to short, and that's down from 99% just 7 days ago. And then again, you guys can also see the cost to borrow here. 7 days ago it was 190%, today is 37%. So it's much cheaper for shorts to hold on to this stock and to continue to short this stock now. Anyways, the days to cover is at 0.57, which is very, very low. If all shorts were to cover on this stock, it would take them only half a day to cover, and it would not really do a huge price bump. Just because the volume is so ridiculously high on this stock, there are plenty of natural buy and sell orders for shorts to fill if they wanted to cover the stock. So here on the chart we have utilization and average age on loan, and a signal that we have used in the past to see if shorts have covered is seeing both of these figures go down, and it's pretty apparent that both of these figures have been trending down with the share price. You guys can see just about a week ago it was at 99% utilization and 25 days on loan on average, and both of these figures have been coming down. We can see that just on yesterday it was 92% utilization and 18 average days on loan. So this has all been coming down, and that is a combination of prior shorts covering and new shorts coming into the stock. Now with utilization coming down, that means shorts are not trying to get in it in general, which might mean that they are afraid of getting squeezed out. What's interesting about BBIG, and might be a sign of a potential catalyst, is the fact that the on loan return shares, so these are basically the shares that are returned by shorts that have been covering, has been exceeding the newly put on loan shares. And this is also shown in the utilization going down, the fact that shorts aren't really taking these newly returned shares and shorting them. And we can see on Monday there was 6.8 million shares returned and 5.9 new shares put on loan. We can see on Tuesday there was about 5 million returned and 5.8 put on loan. Thursday there was about 5.7 returned and then 3 million that were put on loan. So there's 2 million extra shares now that have been returned that weren't put back on loan. And then on Friday we saw 9 million shares returned, as well as 5.9 9 million new shares put on loan. So that's very interesting, and that's also why the cost to borrow has been going down, because it's much easier for a short to actually short this stock if they wanted to, because, well, shorts aren't eating up this stock the same way that they have eaten up other stocks that we've seen in the past. For example, SPRT, or now GREE, that stock, as soon as those shares were returned, they were put on loan right away. They were reshorted right away, even at the insane cost to borrow. With BBIG, it's kind of just fizzling down, and new shorts aren't really coming in, even at these elevated price levels. So that could be a hole in my analysis right there, and that could be proof that BBIG does continue to hang in there, and it is a fundamental play, because we do see shorts not shorting this stock nearly as much as they used to. We also see on Fintel there's about 1.4 million shares that are available to be shorted, and as you guys can see, this figure has been going up, meaning that as time progresses, more shares are available to be shorted. You can also see the short borrow rate going down over time, and now it's at a 35% borrow rate. We do know that there are still failure to delivers on BBIG, as it is on the SHO regulation or threshold list, and you guys can see it right here, BBIG Vinco Ventures on this threshold list. So here's the historical options flow of BBIG, and as you guys can see, it is definitely more calls than puts. You can see the calls versus put premium, it's 90% calls, and the same thing with calls versus put volume, again 90% calls. However, when we get to bullish versus bearish premium, it becomes a different story. As you guys can see, the bullish premium is 60% and the bearish premium is 40%, and typically bears, in the case of a high short interest, high flying, highly volatile stock, they will choose to short or sell a call option rather than to buy a put option, because implied volatility is just so high on the stock that it almost makes it impractical to buy a put option, because they're pricing in such a large move to the downside. So instead, they'll capitalize off of that high premium and they'll short a call option, and they know that some of these perma bulls will buy that call option no matter what. So that's how a bear or short seller would make money off of options. They would short a call option, whether it's in the money or out of the money. Both strategies work on capitalizing off bearish momentum. And you can also see that the overall options volume, especially the call options volume, has gone down. You guys can see it reached a peak on September 8th of 900,000, and now it's gone all the way down. You can see it's only a call volume of 5,700 right now. And you can also see the correlation between call volume right here. Right here is September 8th. We saw a peak on BBIG, and ever since then, it has really come down a bit. And you can see that the overall put to call ratio is 0.19, which is pretty low. There's obviously more calls in circulation than puts in circulation. Judging from the 10 big option trades recently from Unusual Whales, we can also see that there are more bearish bets than bullish bets currently on BBIG, and it's all on the call side of things. So like I said, they're capitalizing off of that elevated implied volatility by selling calls to people that will buy them. So that's pretty much all I have for the analysis of BBIG or Vinco Ventures. It's a very exciting stock to follow. I apologize if my analysis offends you. However, I do believe there is definitely some more pain to go with BBIG. Another thing is that the entire stock market has been going down over the past few days, which is definitely a risk, because to some extent, the entire stock market is correlated, and when the SPY or the S&P 500 starts going down, a lot of people that have more risky assets will start to de-risk. So you'll start to see the more risky plays get sold off more than the safe plays. People like to jump to safety in times of uncertainty, so they'll jump to cyclicals such as banks, such as energy. However, banks did get hit as well from this Evergrande blow up in China, so there's tons of uncertainty. We also have Jerome Powell speaking this week. Some members of the Fed have actually began selling off some of their securities, some of their assets that they have bought, and then other members of the Fed have stated that inflation is much higher than they have anticipated. So these are all big risks. So the Fed meeting is definitely something you need to pay attention to if you're invested in this stock market, because it could go south really, really quickly if the Fed says that they're going to taper or have to raise interest rates at all. That's always a huge risk to the stock market. I mean, the stock market is going to react extremely in the negative direction if they do announce that they are going to be tapering. And this will not only affect the stock market. If they raise interest rates, that's going to affect the real estate market. It'll also affect cryptocurrency. If they are taking money out of the system, it'll negatively affect cryptocurrency. So these are all risks that you do need to pay attention to. I have been predicting a nice correction to the S&P 500. It's been pretty much going only a straight shot up. So if there is a correction, just don't be surprised. Maybe we already saw it yesterday. That was the largest correction in the S&P 500 that we've seen in months. However, there's always a risk that there is more pain to come. And with the rally that we have had over the past year, I do think that there is room for a correction, so don't be surprised if that comes. Anyways, I hope you guys have enjoyed the video. I enjoyed making it. Subscribe if you're new. Remember to hit that bell so you never miss a beat here on this channel, and of course, like the video if you guys have enjoyed. I will be seeing you guys later, and I hope you guys have a wonderful day. Peace.